James, I appreciate you coming back on, man.
I am happy to be here, Rob. Good to see you. It's been a little while.
Yeah,
A lot of
man,
stuff going
that's
on since the last time we spoke.
seriously, it's pretty intense to try to navigate the waters right now. So to start out, I was curious. So I'm going through your Twitter profile, and it says you're just for anybody that doesn't know James yet. He is a prior hedge fund manager. But what I wanted to ask you is, it says reformed hedge fund manager. So like, what was it like on Wall Street back then for you to now use the words reformed hedge fund manager? Like, how does that come to be there? I was curious.
I mean, you try to put something in your handle that is that's truthful, but also kind of shows how maybe you're just a little bit different. So, of course, I want people to know that my background is in hedge funds and in institutional investing, but there's a super negative connotation that's associated with it, right? I mean, hedge fund managers, can you be a bigger jerk in the world, really? So, you know, uh, my story is I had a small hedge fund, and it was during the downturn of 20 or 2000 2002, and it was a really hard time. So, um, reformed is mostly that I saw the light with Bitcoin, and I understand now the driving forces behind fiat in a way that I never did before. So, um, it's not I'm 1 foot in that world, 1 foot out, meaning that's where my experience is, it's where my knowledge is, it's where I could really do well. But I also understand the implications of what that world does to the rest of the world. So, and I'm trying to bridge that gap, if that makes sense.
Yeah, it does. What do you think Wall Street is like right now? Like compared to when you were on Wall Street, and like, what do you think that the word on the street is right now? Are people still not seeing what's coming? Do they not see the writing on the wall? Do you think the smart money's starting to exit here? Because it's crazy to me that with all of the news coming out, it's like the Fed really has no ammo left. There's nothing really they can do, but the market's still up. So it's like, what do you think their sentiment is right now?
Well, the market always anticipates, right? So the market is seeing out past this series of rate hikes. The people I know are fully expecting the Fed to hike 4, 5, 6, even 7 or 8 times, and then they're expecting that to drive us right into a recession. And of course, that's going to force the Fed to start um, their QE and lowering rates again. And so it's just looking out past that. And the bet that I think that the equity market is making is that we don't go into a full recession before the Fed reacts and then begins to support risk assets. So it's also as you have all of these funds and these huge institutions selling bonds. I mean, where are they going to put that money? So you're seeing it going to value stocks, and you're seeing them start taking bites at risk assets again. And the market's down from its highs, not as much as it was before, but I think that that's what you're seeing. You're seeing people look past where we are right now, and it's an expectation for what they see into next year. So do I think we get choppy in here? Yeah, I do. When the Fed starts raising, if they raise 50 basis points in the next meeting, I think that's gonna spook some people and think, well, wow, we're slamming on the brakes pretty hard here. Maybe take a little bit more off and sit in cash. Now, you and I know that our theory on cash is it's a melting ice cube, but with a short-term view on Wall Street, less than a year of cash is not that big of a deal. So as far as they're concerned, as long as risk assets aren't rising in front of them, then that's a safer bet than sitting in risk assets ahead of a really sharp downturn. So we'll see.
Yeah, what scares me is when I look at that like federal funds rate chart, and you realize that every single time they have raised rates, inevitably it triggers a recession. Like there hasn't been a single time on that chart when you see it go up. Every time they raise the rates, recession's right after. You see a little gray period right after that. So it's like, well, you've already brought it to zero. You're sitting at zero, and it's like the worst possible case scenario for the Fed right now. and now they're playing with fire and raising the rates. It's like it
Yeah.
seems like they want chaos. And then now
Uh,
Powell's talking about, oh, there's room for another reserve currency. He never used to talk like that. He used to be so
no,
like
that was
high,
surprising. Yeah,
right?
that was super surprising when that came out of his mouth. I think he's just conceding the fact that the U.S. dollar is, we know it's tied to petroleum, the petrodollar, and so with the geopolitical situations, he has to acknowledge that the U.S. dollar, may not be the only reserve out there, and so it's a little bit scary for the Fed to think through the implications of that. But I'm surprised it came out of his mouth. That was like an unspoken truth.
I mean,
So
it was like back when he used to use the words like transitory and stuff like that. He never would. He was talking like, "Oh, well, we're the reserve currency. This will all pass. We're always going to be the reserve currency." And then suddenly, for him to say that was just totally wild. And then now they're raising
yeah,
rates as they are, and it's like, well, if inflation's at 7.9% is what they say, but probably it's a lot higher than that if you go by
way
the
higher.
actual
Yeah,
figures. But it's
yeah.
like how can you stop inflation even if they jump it to the 2% they want to get it at, the 1.9 they want to get it at? That can't stop the kind of inflation, right? Like, I mean, how do you see that playing out? Is there any way to
Well,
stop it for them?
I mean, our economy is so tied to the markets, and that it's very tied to the financial system, right? So there's so much leverage in the system. So then when you start taking that leverage out, so talk about just the housing market. So if you get mortgages up over 4, 5, 6%, that's on the back end of a 30-year treasury. That's going to price people out of the market. And then once you start pricing a certain number of people out of the market, well, of course, then the housing market starts to dip, and then your equity in your house is worth a lot less across the board for everybody. And so your borrowing power is less, and so you can't take on any more debt, or you can't flip your house to do something else with that money. So that's just one implication of the financial system that's very tied to the U.S. economy is really tied to that system. So, and banks will lend out less money, or they'll be a little bit tighter with it, with people who don't have quite as much equity to lend against. So it kind of cascades into that recession, that it's almost like it's not a trigger, but because there won't be one step that does it, right? But that's the way that we'll kind of step into it, if that makes sense.
Yeah, it's I was just talking with Jeff about this from Vailshire, and he was
Yeah,
talking
Dr.
about
Jeff.
how he
Yeah.
sees it as disinflationary. Like, he didn't call it like deflationary. He says disinflationary, like where if gas prices are too high or house prices are too high, people just won't be buying it anymore, and that will in effect combat inflation in some way. I tend to think that it's just kind of unstoppable right now, and it's just people are going to have to figure out how to live with it because there's not really any tools left. But I was just kind of curious, like, how do you see the next few months? Because in February, that doesn't actually include what happened overseas in this.
Yeah.
So the next one is probably the actual March one is probably not going to be too good on that CPI figure. So it already was bad at
Yeah, I mean,
7.9.
yeah, think about it. Think how much energy is involved, is how much what kind of impact that has on the CPI. For the people who don't know, the consumer price index, and the PPI, the producer price index, is kind of a driving indicator, because the more it costs producers to create the goods, to finish those goods, the more they're going to pass that on to the consumer, right? So then when oil and gas is skyrockets, is up 20, 30, 40, 50% because of geopolitical issues, then that's absolutely going to be passed on. It's not just in the form of gas. It's the creation of the goods, it's the transportation of goods. It's running that machinery to manufacture and finish the goods. Like it feeds into all of our entire system. So that absolutely will impact the CPI down the line. It's a question of not really how much, or but maybe how much they'll admit to it. So how
Mhm.
much of like, what is the next CPI print? What does it look like, and what's actually in that basket of goods? Are they going to shake it up again? I mean, it's hard to tell. So the Fed knows they're back in the corner. And the other thing that people don't talk about is we're in a mid-cycle election year. So much of policy is going to be driven by that administration trying to get this right, where you can have a soft landing and still appear to be in control, which you just said it's kind of out of control. It's going to be very difficult for the Fed to slow this down in a way that we have a soft landing. I don't see a way that they can do it um, eloquently. They're going to slam on the brakes. They're going to overcorrect, and we're going to wind up having a reversal in policy. I'm not sure if there's a lot of people calling for it in the second and third quarter. I think that's a little early. I think that everything lags so much that it's almost like they have to crash before they realize they've crashed. It's not like it's stopping a train, right? There's just so much inertia that they've got to slam on brakes and then overcorrect. And so it may take until fourth quarter, first quarter of next year until they realize that they've got to reverse direction. So, but of course the market is looking all the way out to there. So you've got two plays. Like, where do we put cash if we don't sit on it? And then, well, assuming that it plays out like it has all the previous times we've raised rates, well, the market's up in the face of that. So
Yeah, it's. I'm just curious if you think that, say inflation comes out at 8.5 and then it goes 9.5, and it just keeps going up in that way. How do you think the market reacts to that? And do you think that the Fed is going to just all of a sudden go, okay, well, now we just do QE to oblivion? Like, if there's chaos in the market's crashing. We said we're going to stop, we're going to taper, we're going to unload some of these 9 trillion of assets that we've purchased, and now we're just going to start rebuying again because there's really no choice for us at this point.
well, that's interesting because we had talked about it being transitory, but the funny thing is if the inflation. See, I thought inflation was peaking. I didn't think we were going to be back down around 2%, but I thought it was peaking where we would be hitting 5%, 4.5, 5, 6% around this time. But of course, I think that's not going to happen because of the issues that we have now with oil, and specifically out in Russia and Ukraine and in Europe, and how all that's cascading. So I think that um, it actually could be a little bit transitory here in this next period until that's resolved. I don't know. Of course, I'm not a geopolitical expert. I don't know how that's going to be resolved or when, but if it is short term, if this does get resolved at some point in the next 3 to 6 months, then that truly is transitory and we can come down. So it's a question of what is really driving it. Has it gotten out of control? And is it a wildfire that they just lost control of prior to Russia and Ukraine, or is that just adding fuel to that fire that it will eventually kind of simmer down? So I believe that it's a little bit more transitory here, and then I'm not prescribed to the or subscribed to the catastrophic U.S. dollar event this year. I just don't think it's going to happen. I don't think that we're going to be in that situation. There is, and the thing is, Rob, you know, we underestimate the confidence that people have in the dollar and how much they believe in the system, and how much they believe that this is the only system that really works. And I mean, it makes sense. I mean, how many people were alive in the United States through the Depression still? A handful. So the Great Depression, I mean, like, there's only a handful of people who lived through that. So most people haven't seen anything like that.
Yeah, what I get worried about right now is, like, in 2014 we kind of threatened to take Russia off Swift. We threatened Swift with China and Russia. It was like just a threat. And so there's this paper I had read on the de-dollarization efforts by Russia and China that started in 2014. They're like, well, if they've threatened us, let's get prepared for this. And so they created their own systems to be working around the Swift network. And so when I see them actually do use it as a weapon, they actually did go through with it this time. That's what makes the whole sentiment shift a little bit, because now you're seeing what's going on with Saudi Arabia is doing a deal. I believe who was it that was buying oil from? I think it was India and Saudi Arabia, or it was China and Saudi Arabia. That was no, it was China that they accepted yuan. Saudi
Yeah.
Arabia finally accepted that, so it's like, well, and then you see Ray Dalio just drop that whole bit on that video. It's like a 45-minute video on changing world orders and how he thinks that how China is going to replace the dollar as the world's reserve currency.
Yeah.
And so it's like
What's
that's
interesting.
the but for Powell to say that, that's what made me realize, like, well, wait a minute, the actual chair of the Fed is saying there's room for another reserve currency. That scares me a bit about the whole.
Well, I think they realize that there could be two reserve currencies going at some point. It's not going to happen this year, I don't think. Um, Again, these things take so long. They take a long time to play out. But if you think of some of the stronger currencies that begin to collapse, like the euro and the yen, and they just and those kind of, we've heard some of our friends on Twitter Spaces talk about the milkshake theory. But if they do start collapsing into a dollar milkshake, and then you're left with you're left with the yuan and the dollar, and the yuan plus a a ruble ish, because of the petro strength of Russia, and the US dollar. But that's that's definitely a possibility to me, in not the near future, but in the not so distant future.
Mhm.
And then of course the world reserve asset we've talked about ad nauseum would be Bitcoin, you know, um, and or a mixture of Bitcoin and gold, but probably Bitcoin. And I think that system is probably where we're headed, according to everything that's on the table right now. That would make sense to me. So yeah, I don't know. I don't think that that's really what Powell was conceding, but he may have just subconsciously admitted to it. Does that if
To
that
me,
makes
it's like
sense?
the ultimate sign of weakness to be the chair of the Fed and say, "Yeah, there's room for other reserve currencies out there." It's like, well, wait a minute. That's literally how you're dominating right now. You just gave away your like number one card on the table. Like that's pretty wild to show your here's my cards. You think there's something else out
Yeah.
there. But I was curious, like, what are you bullish on right now, and what are you bearish on right now in the current marketplace? Because like I'm looking at the bonds market right now, and bonds are like all over the place in a way. I'm learning more and more about
Yeah.
bonds, but I was curious because have so much more knowledge on it. What is the bonds market telling you right now, and like what is somebody that's going to lock up their money for 30 years right now? Like for example, gold's up like 12-13% over the last year, but there's people locking up their money for 30 years to get a 2.5% in rate, which right now I'm seeing, 2.5. It's like you're not even beating inflation. Why would you lock up your money for 30 years? I just don't see any reason to own a bond right now.
Because you have a very strict mandate that you have to own a certain percentage of bonds in your portfolio. So remember that the institutions have investment mandates that they have to abide by, and if they don't abide by them, then they're acting outside of their fiduciary duty. And
Right.
so unless they change the mandates, then those are the mandates that structure their portfolio. So they have no choice but to own a certain percentage of bonds, period. And so that's trillions, tens, hundreds of trillions of dollars worth of bonds, not hundreds, but definitely in the tens of trillions of bonds that are absolutely, you have to own them. So back in back in the mid 2000s to just recently, the German bonds, the Bundesbonds were negative rates, not real rates, negative yielding rates for so long. And I just couldn't get over the fact that European firms were buying them. I mean, they were literally losing money on the trade, but they didn't have a choice. It's in their mandates. They had to own a certain number of bonds and government issued bonds. And so they were the safest ones. And so they were willing to lose 1.5 to 1.5% on whatever they were buying, just to meet those mandates. So that's that's one thing, you know. And I don't. So what am I seeing in the bond market? Like I'm watching the 2 and 10 spread, Rob, to get a handle on what the traders and investors, the intelligent investors, what they're thinking. The uh, the the how quickly do we get into a recession? You know. So right now, if you see it, it's kind of flat, right?
Yeah, I'm
It
seeing
had
the
been
two
inverted and
years,
then it's flat. Yeah.
2.11 on the 2 year, 2.33 on the 5 year. And that's funny. For the 5 year is actually a better rate than the 10 year. The 10 year was 2.31 and the 5 year is 2.33. It's like, what is going
That's
on?
because of 10-year. Yeah, the 10-year is the one that people really trade a lot more.
Mm.
That's the key indicator for the near future. So that's telling you if that inverts under the 2-year yield, then it's telling you that investors expect us to go into recession uh, during the Fed's current cycle of action. So the Fed's going to raise rates short term. That's what you're seeing, and those rates are ahead of the Fed, obviously. And then we see the 10-year, if that inverts again, but it's pretty close to inverting. But it's basically telling you that the markets and that the investors are expecting us to go into a recession and for those rates to come back down. That's kind of what it says.
Interesting. Yeah, I had this conversation with somebody in the past about how much money's in the bonds market, and there's like they don't have a choice. These institutions have to buy bonds, like you were saying. But the thing is, it's like
Yeah.
I believe the number is somewhere over 110 trillion is in the bonds market right now, something along those lines. It was like between 100 and 130 or something like that. But
That's
it's
pretty
like
close. My number is
yeah,
140 trillion dollars of investment bonds.
uh,
So Greg Foss and I talk about this all the time. His number is a little bit larger than mine because he uses all debt, like all debt. But what you're saying, and I think you're saying, is the investment bonds. That includes sovereigns and corporates, and so that's what are on the investors' books.
and
So
on like a
sorry, go ahead.
percentage basis, like the thing that I talked about in the argument that I was making is, say on a percentage basis, 60% of that has to be institutional money, but then 40% of it is just is not institutional money, and it's just people choosing to be in bonds. Well, that's still, $50 trillion, that
Yeah,
needs to go somewhere. So even if it was, say it was 90%, which I doubt it's 90% institutional money, I'd imagine the figure is a bit less than that. But say it was even 90, 10% of that is 10, 20 trillion that's got to go somewhere. And where's that
misinformed.
money going to go?
Yeah. Yeah, it's there. Well, why it's there, they're misinformed. They're RIAs or small money managers or individuals who just figure it's safer to be in a U.S. Treasury or U.S. Long-term bond than it is to be in cash, because at least you're getting more of a rate than you are in your checking account. And you've seen um, who was it? Is it Sven who keeps tweeting out that his JP Morgan Chase checking account is still at 0.01% yield, and he's like, so you're not going to get yield anywhere. And so if you can get a couple percent, and you're an individual investor who's not really keyed in like we are to what's going on with inflation, understanding that that's a negative 5% plus return to your money, that your purchasing power is down 5% every year on that.
And you can't
Well,
even utilize that money for cash flow. It's locked up. So it's like, what in the world is this?
Right.
You know, somebody
Right.
somebody who chose that 30-year bond, for example, like if gold, say gold's up 12%, say that somebody put 100 grand in gold, they now have 112,000. They could have bought 1 ounce increments of gold, had full custody of it, decided to sell 12,000, take their profit, still have 100 grand, but take the 12 grand to do something that they wanted to do with that money. And their
Right.
money's not locked up. They had a way better return. Their money wasn't locked up. It's like, why would anybody choose it's like it blows my mind. Like, so the institutional argument, it makes a ton of sense because that money has to go there, but there's still tens of trillions of dollars that isn't institutional money that's choosing to put it in a bond.
Well,
It's
and that and
ridiculous.
that and that goes back to the argument that's why I think this takes a lot longer than people understand. That the confidence in the U.S. government, and that's you're buying the U.S. government. That's what you're buying. You're buying the promise of the U.S. government to hold that money you've sent them and pay you back a little bit more, and that they're going to be liquid enough to do it. I mean, that's the bet that people are making. And so, I mean, for the longest time, Rob, when I started my career, that was just called the risk-free rate. You know, I mean, it's like you're getting there's the 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 word of the U.S. government that their bond with you is that they're going to pay that, and that is pretty much riskless to put your money in U.S. Treasuries. That's what I believed throughout my whole investing career, all the way up through this last cycle. And now the way they printed money, it's a little bit, it's shocking, and it's a little bit scary to think that. And I don't know if it's hubris or if they, I mean, I'm probably, I might be in the minority in our world over here, but I think that the Fed did the right thing by immediately injecting liquidity into the system right after March of 2020, when we went straight onto that downturn. I
Well, it
think
was
that was the
technically a
right thing.
2 month recession. It was like the shortest
Yeah,
recession of all time, right? They stopped it by
yeah,
doing that.
right. But then they went way too far for way too long, and that's the problem. So, and that woke me up to, wow, this is a major issue that we could begin to unravel if this gets out of control. So the question is, and we'll go all the way back to your first question, which is, if it gets out of control, is it out of control? Do you think? I don't think it's out of control yet. Um, I don't think we can have a soft landing, but I also don't think we can go on like this in perpetuity. There's just no way. I mean, the math doesn't work. You know, uh, you have somewhere between 3 and 4 times debt to GDP globally. Do the math. It doesn't work. You have to inflate your way out of future obligations, and that is an ongoing issue that at some point will unravel. Will it happen in our lifetime? I don't know, but it will happen. So, what else am I bullish on? Well, obviously, you and I talk about Bitcoin. That's one problem, though, and we'll go back to that. But um, so I am long term, clearly, but also gold that's a great place to have money. If you don't have money in gold right now, I don't know why. I mean, it makes perfect sense. It's a ballast for your portfolio when you have so much uncertainty in the world. I mean, obviously it means something when the US government is trying to seize and freeze Russian gold assets. It clearly is worth something to the world. And so, as much as I want Bitcoin to be the world reserve asset, to be the prime asset that everybody wants to store their value in, it's not there yet. So, but we can come back to that, and I want to hear your thoughts on gold because, you know, I again, I've been a risk manager for so long. I've been a risk investor for so long that I can't help but diversify. You know, and I've got money locked up in partnerships that I don't have access to, venture capital, private equity. I've got money in investments that are in hedge fund investments that are in long short equities. I've got my IRA is spread out across a whole number of different asset classes, but also gold and Bitcoin. I'm not all in on one thing, but I just can't imagine not having a little bit of gold to help stabilize your portfolio.
Yeah,
So, what are
I'm
your
with you.
thoughts on it?
Well, with Russia, it's like I don't care about what somebody says in like the gossip of it all. I care about their actions. Like, what are you actually doing? Let's study what you're doing with your actual balance sheet. And when you study it, they de-dollarized their economy since 2014. Both Russia and China at the same time de-dollarized. Literally have reduced the dollar to pretty much nothing. And they've replaced it with euros because they have more control over in Europe. So they have euros. But the thing is in 2014,
And now they're demanding to get paid in rubles for oil. So, and so now they're in a fight with Italy saying they're not going to pay. So that's really interesting, but go ahead. Yeah.
what's crazy too is like, and I made this point recently on Twitter, is I was like, nobody knows, and this is actually like a bunch of friends of mine, like Mark Yusko went on, liked on that, and then Mike was talking about how it was a good point. And the thing is, nobody knows how much gold is out there. Nobody knows how much gold China owns. Nobody knows how much gold Russia owns. It's cute to look up a number on Google or whatever to go, oh, they own this much, and oh, we're still number one in the gold holdings. It's like, we haven't audited our gold holdings since 1986. We don't know how
I
much is in
saw
Fort
that. I
Knox.
saw the post of yours, and that's really interesting.
So, like, for all we
That's
know, they have way more. And imagine if they have a combined vault. If China and Russia had a combined vault of gold, they might have, and very likely have, more gold than the U.S. And so one of my things that I looked at it with Russia is from 2014 to 2020, they had accumulated a ton of gold. Like, they have just been buying and buying and buying gold like nobody's business. Same thing with China. So at the same time that they're reducing dollar holdings, they're increasing their gold positions in a very dramatic way. And then they stopped. Russia, interestingly enough, China kept buying, but Russia stopped for 2 years, from like 2019 to 2021, 2022. And then just recently, right after the invasion, they started buying gold again. Not only that, they removed the VAT tax for their citizens to be able to barter
yeah,
in gold. So, like,
that's right. That's
why
right.
did you do that at the same time within the last month? I mean, that's pretty heavy. You started buying gold, and at the same time remove VAT tax for your citizens to be able to transact. Are you planning on having a gold-backed ruble? Are you planning, like, what's the play here for Russians? And at the same time, they are a mineral-rich country. When people talk about, like, my company's name, the reason I chose Mineral Exchange is because people always say, oh, the rare minerals are from there, the rare earth minerals are from there. Russia they have a corner on palladium, platinum. They have a ton of gold that they mine in Russia. So how much of that gold, just like a Bitcoin miner mines the Bitcoin and now they're holding it on their balance sheet, Russia could be mining gold and not telling anybody about it, and just
Right. They're not
continually holding
reporting it.
gold.
Right. That's
So
right. Yeah. I mean, it's clearly an asset that they feel is worth something more to them than the U.S. dollar, and that's because they can't. It's really difficult to put sanctions on gold, right? So much more difficult than it is to put sanctions on U.S. dollars. Let's put it that way. So
mhm.
it clearly has a and it's a stabilizing asset for them, and I think you're right. I mean, all the signals point to them backing the ruble by gold, or just and using gold to get them through this period until they have an agreement
Yep.
with China and the yuan, and what they're going to decide to use as base currency in in that world. So
And a lot
it's
of
it's
Bitcoiners that,
interesting.
they made fun of me because I'm talking about, like, oh, how transportable gold really is, because there's that whole argument like, oh, it's like moving a mountain to pay for anything in gold. It's like, well, first off, all these central banks around the world, are they just gonna just say, oh, our gold's worthless, we're just gonna all go into Bitcoin right now? It's like, maybe like 5, 10 years, 20 years down the line, they start accumulating a Bitcoin position, but I highly doubt they're gonna go, oh, all this gold that we've been storing for dozens and dozens of years, yeah, it's just worthless now. Okay, well, no, like, no, why would they if they're recently accumulating and they recently started buying gold again? I mean, who's to think that they're just going to randomly go, oh, well, throw these shiny rocks to the hills over here, they're not anything to us? And it's like, obviously the first choice they're going to use to destabilize the dollar is gold. They have it right there at their disposal, and they've been accumulating it. So, but the main thing I try to bring up is like the reason I showed like I posted a picture of like one of our aircraft carriers, right? They're like, oh yeah, you're going to use an aircraft carrier. You could literally, just to put it into perspective, one of our U.S. aircraft carriers could carry all the above ground bullion of gold in one trip. All the gold in the entire world could fit on one aircraft carrier and move
Wow.
in one trip. So yeah, it's an aircraft carrier. It's ridiculous to use an aircraft carrier, but just to put it into perspective, like people think, oh, you can't move all the gold. It's like you could literally put every single ounce of gold on an air, and there would be like still like 50 tons to, or no, like 50,000 tons to spare, or something along those lines. At the same, because it can't transport around 130,000 tons on this boat. So it's like a small military, small navy type vessel could easily transport tens of billions,
Yeah.
hundreds of billions in gold to the Saudis from China or for whatever. Like, and the odds that people go, oh well, that's one cruise missile away from being a devastated. It's like, well, I doubt anyone's going to declare war over a small amount of gold moving in a transaction. I mean, I have an SS Garsopa bar from when one of the U-boats shot down the Garsopa. It was an English ship that got shot down in World War II, and they were transporting silver bullion from India back to the UK. And so they've been doing this via boat for a very long time. It's
Yeah.
nothing new. And the only difference now is we have advanced technology where they could move 10 billion on a plane very easily, anywhere
Yeah.
they want. So part of me thinks it's like, why would the Saudis accept yuan? Well, maybe they know it's back to gold, and maybe that deal is there's something to do with gold in the background, because Saudis love gold. They've done this in the past to us. Back in the 40s, they forced our Philadelphia Mint to actually make these little gold coins. I've had them as they're collectibles now that are graded, but they
Really?
made these little
Yeah.
gold poker chips to pay Aramco. So
I
they
didn't know
forced
that.
us.
Interesting.
Yeah,
Yeah.
they've done it. So it's like I
That all
think
makes
that it's
sense.
first
It makes
choice.
sense. Yeah. 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 It makes
That
sense. I mean, yeah, Russia's not standing up their own cryptocurrency to be a that's obviously not going to be a currency that would carry any weight as a reserve. There's just no way. I think you're right. Everything points to that. So, something interesting that you brought up there though is the physical aspect of gold. And so, one of the things that I think is really important in all this is that if you want gold to be a hedge against fiat disaster or hyperinflation, I would strongly urge you to use physical gold, not paper gold, not just buying paper gold in the markets. Now, if you can't
you're
get access
an
to,
ex hedge fund guy just said that. Just ladies and gentlemen, for the record, don't buy an ETF, get the physical. Wow, you're a good man, James. That's a rarity around here.
and if you want, if it's something that you don't know how to do and you're a little bit nervous, you want to figure out how to store it, or you could buy paper gold to hedge yourself in the meantime while you're setting that all up, and then you just sell the paper and buy the real gold once you're ready, so you don't miss any moves if that's the case, if you want to be hedged now. But that's what I would do.
People
So
really don't understand like how small, like, because this is even if you took the case off of this iPhone here, this is around $65,000 in gold. If you were to picture this as gold, it's actually probably about 75 because it's a bit bigger than a kilo of
yeah,
gold. A kilo of gold's actually it's about here. So
yeah,
it's people tend to
yeah, it's not
forget
going to
like
fill
just
up a
how
whole
much.
safe, and it's not going to fill up a whole safe, right? But okay, and one of the things though is that it's a good point that you're not going to cross hostile borders with gold in your pockets. Like that's just that is obviously not a wise move. They'll be stolen, you'll be beaten for it, whatever. That's clearly the winner. There is Bitcoin or stable coins. If you for whatever reason you don't have access to Bitcoin, I don't know how that would happen, but if you have, did you read that piece today? Let's see. It was a piece by I'm gonna tell you who it was so I don't get this wrong. Mackenzie Segalis from CNBC, and she was talking about the importance of cryptocurrency for the Ukrainians fleeing, and actually just having access to their money because the bank shut down a good week before the invasion. They started shutting down, and so their citizens are very well versed in technology, more so on average than a U.S. citizen, from what I understand from her article. And so, they're not going to be walking around with gold, clearly. So part of this is absolutely an investment decision, and an investment, you know, uh, hedge, versus just a flight to safety, or true flight to safety, like a citizen in a hostile world. So clearly, I mean, but that's good. They can balance each other. We can use them both. I think they both have a place.
That's
And
exactly the
as
thing.
yeah.
It's that's exactly it. What people don't tend to look at is like you put the entire. I always keep using the same line, but it's like you put the entire basket of all the precious metals and Bitcoin in the same space. You're talking about less than $15 trillion there. You got hundreds of trillions that needs to flood to a safe haven. It's going to go into that place. But the other way I phrase it too is it's like how much more purchasing power, because what it really should be about is how much purchasing power do you have outside of traditional banks. And the Ukrainians are, just like you said, are really feeling that right now. Like if you don't have purchasing power outside of the banks, well, then now you're going to understand what custody is very fast. The Canadians figured that out really fast. Now the Ukrainians are
Yeah.
figuring out that really fast, that custody is a big deal. But how much more purchasing power does somebody have that has a pile of diamond? Well, diamonds not really. I don't like diamonds. But say you have a pile of gold, a pile of silver, some palladium, some whatever. You have like all these different metals, but then you also have Bitcoin on top of that. That person, in my mind, has more purchasing power outside of the banks than somebody with only Bitcoin. So some people argue with me that that's not true or whatever, but I'm like, you might get that seized, but that also could be something that somebody knows of. Like they know of gold, they know of silver, so you
Right.
have that barter in a way.
And that's the point, right? So, and we have this argument all the time. I'll post something and I'll get the comments in this section, are they're
Twitter's
getting
pretty wild,
comical.
man. Twitter's a
It's getting,
Twitter's a
it's got,
wild place,
it's
man.
gotten crazy. And people get pretty salty when we have difficult markets, right? So, no, I say these things, and I admit that Bitcoin is still considered a risk on asset. Period. You can't people you can't argue that. It absolutely is moving with the technology sector of the market. It is. It may be leading it at times and lagging at times, but it is correlated. There's no doubt about it. So highly correlated. Why is that? Well, it's misunderstood. It's not understood. It's being used as a risk asset by a large, meaning a deep and widespread investing community, and so it's going to continue like that until it doesn't. And so when it decouples, we will know. We will really know when it decouples, and it hasn't happened yet in my mind. In my opinion, it's not even close. When it happens, though, it's going to be absolutely mind blowing, in my opinion. But it's going to take a while. It's going to take a while for it to be widely understood and widely known. And to your point, gold is widely understood and widely known and accepted as a store of value still. And I believe fully, wholly, 1000% that Bitcoin will get there. I do. And probably, well, definitely at some point in the future, it will usurp gold in that way, but not for a while. I mean, it's just reality. I wish it were different, but it's not. It's just the way it is. So,
Yeah, I couldn't agree more. And it's really a shame that there's so much headbutting going on between gold bugs and Bitcoiners, and it's like there's so many people that own zero point 0.2 Bitcoin telling somebody that owns 10 Bitcoin that, oh, you're foolish for having gold in two. And it's like, well, what are you talking about, man? Like I hear that all the time. Like it's like geez. But to me, it's about purchasing power outside of the banking system, and I really don't think it's going to be about number go up. Even with Bitcoin, it's not, like people know. I think that it'll be in the future. I think it'll be 1 million plus a coin in the future. I really do believe that
yeah.
the odds are really in the favor for that to happen. Some people think we're crazy to think that, but I think it's there.
Yeah,
But it's not even about that, though. It's about, do you have purchasing power in your own custody? How many hands do you need to ask to get your money? And
exactly.
if that's what
Exactly.
I'm worried about.
Exactly. And, once we got off the gold standard, all bets are off. So, I mean, just think through that. We got off the gold standard in order to control the monetary system in ways that we couldn't while we were on the gold standard. So, what does that tell you about gold? Well, it tells you that gold is a strong anchor. And if you own that, then you know that you are not tied to that inflationary fiat system negatively. You're actually tied to it positively in direct correlation or inverse correlation. So
Yep.
I mean, I don't know why gold has not done better in this market. I suspect a lot of it has to do with paper trading.
Mhm.
A lot of it has to do with the futures trading and the way people are using it to hedge. Uh, but it still doesn't. And we have a lot of friends who love to, uh, you know, tout the fact that gold has done nothing. But the
Well, what's
reality is what you
crazy,
just said.
I
Yeah,
mean, if you look at it from purchasing power, from my calculations, I mean, over the last year, which is picking and choosing a timeline, you go from March of 2020, it's a much different
yeah,
story. But picking and choosing the last year, if you go over the last 365 days, the purchasing power of gold in Bitcoin terms is like 37% or something along those lines. It's favorable to gold. Because gold's up 12%, Bitcoins are down, I think, around 25%, something like that. So it's actually
right.
increased a lot of purchasing power based on what it's done. But for the long term, if you look at tooth, I mean, it was at the same level in 2011. So nobody can deny that. If you
Right,
were in Bitcoin in 2011 versus if you were in gold
right,
in 2011, you're flat. And so it's like when you pick and choose the timelines, it's clear Bitcoin is the winner. But to me, it's like a basket of all those decentralized assets is really where it's at, because nobody can take away that gold. It's a dichotomy because it's a bad thing and a good thing that there's not a clear way to audit or have a ledger of gold. But at the same time, that's a good thing in a way, because now there's no memory, there's no aspect, like nobody can deny that this is a rock. This is not, there is no ledger of this, there is no finite
mhm,
amount that people know exactly where it is. So it's both a good and a bad. And so that's why I've never understood why it just makes sense to have both in my mind.
yep.
But
Yeah,
yeah.
they're both the same mentality, and the perfect example of that is Peter Schiff, who we agree with on 99% of everything he says until the punchline, which is Bitcoin is worthless. I don't believe gold is worthless, and I don't really believe that he believes that Bitcoin's worthless. He just, and I don't want to get into debate about that, but that's the point, is that we all like, the mentality is understanding what's going on with the Fed and our monetary system, and why there's a need for uh, assets like gold and Bitcoin, and they complement each other in that way. So, or at least they mirror each other.
I wanted to run something by you on what the right play is right now with everything going on, because it seems like I'm looking at the
Mhm.
DX. When I look over here, I have the trading view popped up, and the DXY right now is at 98.63, which is pretty strong for comparing it to the basket of fiat currencies out there.
Yeah.
And in my mind, I've always been saying that I have this dollar hot potato theory I keep bringing up, and it's like, well,
Hmm.
people are going into the dollar until they feel the pain of inflation. And then when they feel the pain of inflation, which is not, they didn't feel this back in 2008. In 2008,
Hmm.
I don't even think, inflation wasn't even 1% back then. So,
Right.
so now we have inflation that's 8%. That's what they're saying. I mean, if you go by shadow stats figures and stuff, I mean, we're talking about 16, 17% inflation, maybe even 20. But that situation, you have this hot potato in a sense, and it's inevitably going to burn you if you don't throw that dollar at something. So
Right.
I'm just curious how this plays out. Like, is real estate the right answer? Is it all going to flood back into safe haven assets? Like, where does this all, if say hypothetically you have a broad market crash, you have all this money sitting in dollars, the M2 velocity is down at what, 1.12 I'm looking at. So it's like the
Hmm.
velocity of money is lower than it's ever been before of M2. So people are sitting with their dollars under the mattress, and the dollar's showing strength, but the market is looking really lofty with the Fed pouring gasoline on a possible really bad situation here. So if the market does crash, where do those dollars go in your mind? And what does that do to, say, real estate or gold or Bitcoin?
That's a good. I mean, I think that you'll see gold take off personally, and unfortunately, Bitcoin is, like I said, it's still considered a risk-on asset. So, you know, I think Bitcoin would lead it. If the market really did crash, I think Bitcoin would lead that and then recover before the market did. We've seen that happen. It's like the ultimate leader of risk on at this point, unfortunately. I mean, it's ludicrous, but because it's not, if you understand the asset, it's opposite of that. So that's a good question. Where's the money go? And that's the problem. Well, that's why the market is still holding in here. There's a ton of capital out there. Where do you put it? Well, if rates are going up, do you want to go into real estate? Not really. Like we just said, at some point that will trip, and that market will soften quite a bit at a certain mortgage rate. So yeah, it's a difficult. Now you know what it's like to to manage assets for a living. I mean, it's a difficult question. There's nothing that's super attractive to me.
Mm-hmm.
So you want to ride it out for a while, and you don't mind being in the markets, well, then you should be in value stocks. You're not going to, you don't want to be in growth stocks. You don't want to be in those high beta tech stocks. You want to be in low beta, high dividend paying, high cash generating companies. I can't name any here on this show because I'm still affiliated with the hedge fund that I'm with, even though I'm not in the investment side now. Um, but that's what I would be doing because I have a longer timeline. And that's what I have been doing. I have a longer timeline than, the boomers do, but I can wait out 10, 15, 20 years in my portfolio and not really worry about it. So it's okay to me. So, yep, gold, Bitcoin, value stocks, private equity, those are good. Those are good places.
Do you
So
think it's a crazy idea to, because this goes against literally everything that I believe in, but you think it's a crazy idea to have a larger cash position now based on it? Because cash alone, you're going to be losing purchasing power. It always loses purchasing power. But the thing is, it's like cash is king if you have a plan of action with it, in a sense, So
correct. Yeah, absolutely. I mean, to sit on a pile of cash for 3 months, 6 months. Okay, let's talk about that. Let's say that the real inflation rate is 20%. Let's say that it is out of control. It's 20%, which is probably only a few percent than it really is. But so if you sit on that for 3 months to 6 months, somewhere in there, I mean, you're talking about somewhere about 5, 7, 10% of purchasing power that you're giving up. But at the same time, if the market drops 20%, well, you're still in the black on that, as opposed to buying bonds. Well, you don't want to be buying bonds heading into a rising rate environment. That makes no sense. So you don't want to do that. Do you want to buy real estate? You don't want to buy real estate going into a rising rate environment. So you don't want to do that. You can buy some gold. You can buy some Bitcoin. You can sit on it and know that you're sitting on it for a while, dollar cost average into it. But, you know, um, I'm not against sitting on some cash for short term, like you said, watching for opportunities and waiting for an opportunity to buy risk assets once they do capitulate, and you'll know when that happens.
it's tough. It's tough because I'm looking at commercial real estate, looking for the next warehouse location for Mineral Exchange, and I'm going, should I just be sitting on a pile of cash right now? Should I dump a good amount of inventory and sit on 30-40% cash, and then have because I would have, the way I look at it personally is like I would have anxiety if I was trying to time out gold or trying to time out silver, or time out Bitcoin, where exactly the right time to buy, right time to sell. That just isn't how money's
No, it's
made.
so hard. It's so hard. Yeah.
Yeah.
I mean, investment managers get it wrong all the time. It's very difficult. So
So
that's why you buy a
hypothetically,
little bit.
say
Yeah.
say like you have you're an investor that has $1 million liquid in dollars right now at this exact moment, and this is not financial advice. I have to say this disclaimer, and there's nothing to do with financial advice here, so this is completely just opinion based. But say hypothetically you're sitting on $1 million in cash. What do you do in that? Do you sit on the cash? Do you start accumulating 50% in gold and
It,
Bitcoin? Like what kind of
it
allocation would you be
depends
thinking about?
if it's $1 million long term. Like I don't need it for at least 10 years. Then I would be looking for um, very smart private equity venture capital funds. Of course, if you only have $1 million, that's it. You get you get one shot at that. But if you know them and you can put in less than $1 million, that's one thing. But uh, I would also be allocating some, like I said, to gold and some to Bitcoin. But I would not be buying real estate today, personally. And I would not be buying growth stocks. If I needed some income, maybe I would buy some value stocks and know that I'm just going to sit on them and be making the dividend returns on those and some cash flow from it. Those are, but other than that, or maybe buying a business that you know that you can grow over the next number of years, something that's not cyclical, something that's not high tech or sexy, but much less, uh, cyclical type of business, then those are the things I'd be looking at. And you have to think outside the box. You can't just think like, okay, well, I'm looking at the stock market and that's it. I'm looking at currencies and that's it. You got to start thinking way outside the box on that stuff. So that's what these environments demand of of intelligent investors, to get outside the box, get outside the noise, and look for opportunities that are not just mainstream. If
Yeah.
that makes sense, yeah.
It's so tough to navigate the waters of what's going on right now. It really is. The more I put my mind on it,
Mhm.
it's like the best thing you could do is have your own business, so you could change, like the dollar store changed their price to $1.25. That's how you get yourself out of inflation, is you have your own money printer, But not
Correct.
everybody can do
You
that.
have your own business. You should be, be investing in that business intelligently. But you're a smart guy. You've done exceedingly well, and I think you'll navigate this perfectly, or near perfectly. Uh, you're not just out there grabbing risk, which I think is that's the wrong approach today. You
And that's
know,
unfortunately what you
yeah,
see across the board with some of these investors. They go, I got 100 grand to my name. Well, I put it all in Bitcoin. I'm rich now, And it's like, well, wait,
yeah,
you build a business and enjoy capitalism. Do something here to build something, and then that's how you're really gonna get ahead. But people always ask me all the time. It's like, oh, what's the best place to put the money right now? Well, there is no get rich quick scheme. It's like figure out a way to get your cash flow
no,
up.
no. The get rich quick equals the risk that you're taking.
Mm-hmm.
Period. I mean, I don't know. I didn't buy any Bored Apes. Did you? So,
I wish I did in the beginning. Jeez, man, like that's what. But I would be dumping now. That's for sure. It's like that's such a weird situation there. It's really
I
more like
cannot figure it out.
the only thing I could grasp at on it was because I try to find, like, I don't want to just insult something. I want to make out lay out a thesis on it and go, okay, why is somebody putting $250,000 into a JPEG? What is the reason for this? And the only thing I can come up with that makes sense is there's some very popular crowds out there that are using it as like a membership. Like you get into this gym
Yeah,
with this NFT sort of thing. You get into this club, and I'm like, okay, well, I guess that can be interesting. You get into a clique of people or something for a networking type thing, but I just don't understand people,
not for
Joe.
millions of dollars,
Yeah,
unless that's a club that I can't afford to be in.
there's something going on in regards to like tax havens and stuff like that. There's stuff
Yeah,
going behind the scenes on the reason why a rock will sell for $1 million or something like that. It just doesn't
that's
make any
just
sense at
crazy.
all.
That's
But it's
hilarious.
like
I love it.
it's just a
Hilarious.
wild
Hey,
space, man. Who
yeah,
who knows?
there will be speculators to the end, no doubt about it. Yeah,
So
that's fine. It's hey, all the power to you. If you made it on eighth, that's great. I was not of that mind, so that mindset.
Yeah,
So
I like that about you, that you have the long term approach to things. You're not a trader. Like I was talking with Dr. Jeff, and he's in a tough predicament because he's building his hedge fund right now, and you're more so like you've already lived that life, and now you're looking for long term investments, and so
yeah,
he's kind of being pulled by both arms. Like, oh, am I going to be a trader? Am I going to be an investor? But with his own holdings, he's thinking long term. He has the Jesse Livermore type strategy, where it's just most money's made by sitting on your hands.
right.
But the problem
But
is how
active
long can
trading, yeah,
you yeah, like how long can
yeah,
you sit on your hands though? Like who's strong enough to actually wait the 10 years sitting on their hands? And somebody like you
yeah,
is capable of doing that, but not everybody knows that hey, it takes a long time to build wealth. It's not just an overnight
yeah,
thing.
yeah. And it's not just that. I mean, like if you want to trade, I mean, I'm confident I could do well trading, but I don't feel like sitting in front of the screen all day looking at charts, watching for 5-minute candles. That does that. I mean, I've done that stuff far too long, and that does not excite me. It's nerve wracking. It takes a massive amount of discipline, and that's probably the thing that people underestimate the most with being profitable in trading is just the sheer discipline it requires. And that's not just having a system, but really honoring that system through the absolute worst periods and knowing that you're making the right decisions according to your system and abiding by it. That's hard. It'll take years off your life. And I don't have enough left to waste anymore.
It's funny. It's the funny thing is like once you've go, it all depends on how much capital you have too. So if like if someone's just starting out in life and they're in their 20s and they got 10 grand to their name or something like that, their strategy is way different than somebody that's already
Yeah.
established themselves. So
Yeah.
that's
Yeah.
the thing.
Yeah. I mean, if I was a kid, yeah, it was fun. I mean, it was exciting, absolutely. It was a thrill to be trading daily, watching that stuff and moving the money around. But I think being a long-term investor, like you are too, I can tell. It gives you more peace of mind. It's much more methodical. It's not that it's more thoughtful. It's just that you're taking a lot longer to get comfortable with an idea. You can have like a half-baked idea and trade around it and do well if you're a good trader. But you can't have a half-baked idea and do well with it in a long-term investment period. You have to have absolute true conviction. And I mean, I write about that. You have to have true conviction, and that gets all the way back to the whole Bitcoin thesis, which is, yeah, I have true conviction that this is an asset that's going to appreciate in value substantially in the long term period. I don't know if it's going to be this year or the next 2 years, but I am very confident in the next 5 to 10 years that this appreciates significantly. And that's why I talk about it being the most positively asymmetric trade that I've been faced with since starting this business. So, and but I've done a lot of research on it. I'm super comfortable with it. I understand it. And I think the adoption only grows, and that the use case for it only grows. And it's pure math. The more money that comes into the network, I mean, the more each Bitcoin has to be worth. Infinitely divisible means it can just keep going. So it's yeah,
Well, the last question I would have for you, because I know I've taken up a lot of your time, James, and I appreciate
yeah,
you being here,
yeah.
man. Um, Coming from the hedge fund world and Wall Street world, what do you think of ETFs right now? Like we don't have a spot ETF yet. That's the thing that everybody keeps talking about. Are we ever gonna get a Bitcoin spot ETF? But to me, it's like the protocol. When you read the white paper for Bitcoin, it talks about peer to peer. It's a peer to peer network.
Hmm.
So ETF, it's still a protocol. It doesn't change anything about that protocol. But it's not. It's like using an iPhone to hammer a nail. It's like, why are you
Yeah,
doing that? Use a hammer, but for some reason, someone takes a brand new iPhone, starts hammering a nail, and they buy an ETF when they could have custody so easy of this. And I know that like hedge funds and stuff, they don't understand how custody works, or they're afraid to do it. Like, how do you see that playing out? Do you ever see in the
so
future
yeah.
that they would take
Mm.
custody of it or something like that?
So okay, it's kind of twofold. For an individual investor, I think that buying Bitcoin outright, and taking custody of it, putting it in cold storage that's the best way to do it. Period. There's no way around that. But if you're an institution, right? The thing is, there's a lot of money that can come into the space that's not coming in yet because of the hurdles that they have to get over as institutions to buy an asset like Bitcoin. So what does that mean? Well, first of all, as a portfolio manager, you have to have the portfolio manager get comfortable with it. And you've heard me talk about this a little bit before, but the portfolio manager reads his research. He understands the asset. He gets it. He knows that it's an asset that's different from others, and he wants to own it. We're talking about somebody that's crossed that Rubicon of risk asset to risk on to risk off, and understands it and wants to buy it in a portfolio allocation, right? So he's got to then get his chief investment officer. If he's not the investment officer, he's got to get him or her, comfortable with it. Then they have to get in front of the investment committee and get them comfortable with it. And then they've got to get in front of the compliance officer or the compliance committee and get them comfortable with it. And then they've got to get their back office up and running and understand, in this series of meetings, okay, well, if we buy it, what's the trading mechanism we're going to use? How are we going to trade it? What exchange are we going to use? Then how are we going to market? Because it doesn't close. Are we going to market on New York hours, London hours? Like, how is that going to work? Then how are we going to custody it? Well, if JP Morgan isn't custodying it for us because they're our prime broker, then who's going to custody it for us? Are we going to use a custody agent that we've never used before? That's not really mainstream. It's not one of these big institutions that we can tell our investors that, well, we trust them because they've been around for 80 or 100 years, that it's this new company that's been around for 15 or 5 or 3, so that's another thing that they've got to get over. And so all of those steps take time, and it takes a long time to get to the point where you can actually buy actual Bitcoin, underlying cash Bitcoin, not an ETF, not a future, not a piece of paper. It takes a long time. So why is an ETF important? Because you skip all those steps. You literally are able to buy an ETF that's traded on an exchange, settle it with your current prime broker, mark it according to how the ETF is marked, allocate it in your portfolio according to the dollar percentage that you're buying, period. Super simple. So it's a great way for either RIAs who are not super knowledgeable about Bitcoin, but their investors want to have an allocation. They can do that. Or huge institutions that have to go through all those hurdles to get to the point where they can buy it. Yet they want to buy it now, but they don't really have a good mechanism to buy it. They're looking at the futures ETF and they think, well, that's not really it. I don't want to buy a trust either. I want to buy actual Bitcoin, knowing that an spot ETF, cash settled, Bitcoin would be the premium way to go outside of owning the underlying itself. That's the importance of it, to get us to that bridge where it's going to take, a number of years until institutions are all set up to do that individually. And until we get there, there is a marketplace for an ETF. Do I think it's the best way? Nope. Do I think an individual should be buying an ETF instead of the actual Bitcoin? Nope. But I think for RAs and institutions, it could be a really powerful injection of capital into the space, into the network quickly. So
Well
that was a
said.
long answer.
Well, that's like it just shows how much experience you have, James. It's like not everybody has the experience of being in a hedge fund and seeing exactly the parameters of how much it would take for them to actually buy Bitcoin. And this also goes for gold and silver. It also goes for precious metals, because it's like they're not just what are they gonna do? Have their own vault in their fund? I mean, JP Morgan they're actually the custodian for SLV, so they really figured out a loophole on that one. Those they're criminals, literally.
Yeah,
Um,
and I know hedge funds who have taken custody of gold, and it does take steps. They can do it because a hedge fund's a little bit different because they're, if it's in their mandate, they can do whatever they want. Which I think I wrote about that the last weekend, but it's it, exactly what you said. It's those hurdles that you don't think of as an individual investor, that it's not that anybody is not intelligent. It's just it's kind of a knowledge base that not many people really have been exposed to. So I know there's a lot of frustration. We've talked about institutions coming into the space. I believe that they're coming, and I just think it's going to take a long time. I mean, it could take 6 months, 9 months, 12 months until many of them get that comfort level and those parameters in place to be
yeah,
able to actually functionally do it. It's a lot of tape, even if it's not red, that they've got to cut through. So
yeah. It's almost like a ETF or a spot ETF would be like short term bullish, long term bearish in a way where it's like they don't have true custody of it, but short term it would put a lot. They would have to buy the real Bitcoin to cover, the ETF, right?
correct, exactly. I think it'll be around. It'll be a function of it. It just will be. So uh, I just saw there was one exchange. I think it's Tokyo that just approved Bitcoin to be traded on their public exchanges. So
Really,
it itself, yeah. So that was interesting. I have to look at and see what the parameters are for that, but
I
that
didn't
would
even
be
know about that.
really
That's actually
interesting.
pretty big
Yeah,
news.
yeah. I just saw that earlier today, and I think they've approved it, or so I'm going to look into that. So, but if
Interesting.
you start having things like that happen, I don't see that happening in the New York Stock Exchange, but it's an interesting development.
Yeah,
So,
that's. I want to. I know you have places to go, but it's like, what do you think is the needle that could get that could actually make this have the movement that you talk about? It's like, because I like the way that you phrased Bitcoin earlier, where it's like when people finally see it as a risk off, it will be really like you'll know. It's not like you're going to see, oh, this little uptick to 45K, now it's detached. It's like, no, you'll see it jump tens of thousands just
yeah,
overnight, sort of thing.
yeah.
Like, what do you think that trigger could be? Could it ETF? What would be
I,
a
you know, I,
thing?
I think it's a confluence of factors. We've got to get through this choppiness of the risk on assets being, uh, you know, there there's so much uncertainty around them right now with the Fed, with the geopolitical uncertainties, and I mean, it's not often that you have risk on assets go to new highs during war, so, or the threat of world war. So um, we've got to get through that. You got to get enough institutions and large money in the space, going through all the steps I just spoke of, and to start allocating to it. I mean, like we've talked about it before, the size of the addressable market just for the investment market of Bitcoin, the full market of 120 trillion dollars of stocks, 130 trillion dollars of investable bonds. You've got $300 trillion in real estate. That might go down a little bit, but you've got $30 trillion of art and collectibles, and $10 trillion of gold. I mean, add all that up, and then over $100 trillion of M2, and your cash and savings and cash equivalent securities. You're talking about $700 trillion of investment assets, right? So if you just have if you have 1% of investors across the board buying Bitcoin, just a 1% allocation, that's over $300,000 Bitcoin. So, I think what it's going to take is for you to get closer to that across the board allocation, whether it's um, heavy with institutions and RIAs, or not, and but enough that Bitcoin stabilizes over that six-figure price where it's over $100,000. It gets over it, it stays there for a little bit, and becomes stable enough and not volatile where it's up and down 10 or 15% a day. And then you have the institutions that have been lined up, ready to go, and they finally pull the trigger. And once a few of them pull the trigger and start buying it up, it's not that they don't care about what the price is. They just know that they have X amount of millions of dollars, tens of millions or hundreds of millions of dollars that they have to put to work in this allocation, and they're going to get what they need before the next allocation. And they're just going to start buying it. And once that flurry starts and you've got a bunch of institutions standing around saying, well, we were ready to buy it too, and they're, so they start piling on. And I think it runs from 100 to 250, and then that's it. It becomes its own asset class. And that's when it becomes uncorrelated, when it really solidifies as its own asset class away from everything else. That's the point. So, and it's going to be, it could be a number of factors. It could be the ETF. It could be a number of large companies. I don't know, like Apple or Microsoft saying that they bought some for their treasury. It could be very large institutions, huge pension funds announcing or admitting that they have an allocation, and then there will be a pile on, and then that's it.
Mhm.
It's gone. So that's my
Yes,
opinion.
I agree with you. Okay, it's a really well way to a well phrased way to say that. Uh,
Thank you.
but yeah, it's rare to find somebody that actually has deep like. How long? When did Bitcoin first come on your radar again? Like to get this. I mean, you must be spending hundreds and thousands of hours almost, learning Bitcoin. Because I know when I first learned about it, I'm like, I gotta really dig into this because if I'm a gold bug
Yeah.
that's gonna be interested in Bitcoin, I better figure this out right if I'm gonna start talking about it. So like, how long did it take you to go like, whoa, wait a
Well,
minute, this is crazy?
well, the first time, I mean, the first time I was introduced to it was back in 2018, and when it had just dropped all the way back down to $4,000 from the 20s, right? And I thought, not this is something that is unique that I want to look into, and I made the biggest mistake of my investing career by turning and asking my institutional analyst friends about it, the technology focused analysts, and like, tell me about the Bitcoin, tell me like what is going, and invariably they all just said, oh, it's a you know super risky speculative thing, really not worth it, there's nothing to it, it's a Ponzi, and all the institutional nonsense that you keep hearing about it. So I turned away from it, and I did something else. I did um, a venture investment that's done well, but I missed the opportunity to start accumulating back then. Then we got into the pandemic. We got into lockdown, and my son actually, he's in college right now, and a bunch of his buddies were talking about cryptocurrencies, and they were really heavy into Ethereum. And he's like, Dad, you've got to check out this cryptocurrency. He said, I bought some Bitcoin, I flipped it, I've got Ethereum, you need to check it out. So the first thing I did is I bought some Ethereum, and I started digging into it, and quickly reallocated that to Bitcoin once I started, because the second time around, I started doing research outside of the institutional world, and I started asking people and looking at YouTube videos that had Michael Saylor. Probably the most powerful one that I saw was I think Anthony Pompolini. That Pomp was he was interviewing Jeff Booth, and I think I listened to that interview twice before I pulled my wife in and listened to it for a third time. And just, it blew my mind at thinking of the barbell of inflationary versus deflationary pressures and where that takes us and what the release valve is. And once I heard that, it was game over. Then I really, really started digging into Bitcoin only, and reading the Bitcoin Standard, reading, hard money you can't with,
Yeah.
uh, and reading the white paper, getting on Bitcoin Twitter, and talking to people, listening to them about the strengths of Bitcoin versus all of the other cryptocurrencies. What separates it, truly separates it from anything else. And just the more I dug, the more I learned, the more I understood, the stronger my conviction became. And there's nothing like it. There's nothing even come close. Nothing. So clearly.
Yeah, it's I felt the same way. It's like there is no possible way to digitize gold and silver, and no gold bug can make a way around that. So that's the thing. It's like Bitcoiners can be mad that I enjoy my precious metals holdings, but at the same time, I can expose the real points, not the points that Peter Schiff, like it just wants to, say whatever, but the real points on both. What is the worst possible case for Bitcoin is for them to not allow you to offload it from an exchange. That's worst possible scenario in my mind. Worst possible scenario for gold and silver is that if you trust it to be digitized, because a custodian has never been able to be trusted with gold and silver. They steal it every time or they lose it. Whatever happens there, you can't trust them to digitize it. So a token based on gold is like you're same thing if Russia does it or China does it.
Yep.
It's still you're trusting custodian that has proven to steal it time and time again. But on that note, James, you spent a lot of time with me. I appreciate you doing this, and I'm sure everybody really enjoyed this conversation and had a lot to learn from you. I know I did, and so I appreciate you coming on. Where can people find you right now? I know that I'm looking over here at I have your Twitter pulled up, but you also have a Substack, I think, right? So people can subscribe to that.
I do, yeah. That's right. That's right. I'm James Lavish on Twitter, and then right underneath my in my bio somewhere, or underneath it, you can subscribe to. I have a newsletter. It's called The Informationist, and I just try to take something that's complicated or unique or maybe buzzwords that people use all the time in our community. And there are people who are new to investing. They're new to the economy and the macro economy. And we use these buzzwords or acronyms or terms all the time. And we forget that they're intimidating. And somebody coming into the space and they see a post that's got like 4 or 5 acronyms in them about the Fed and CPI and, you know, um, the yield curve and all that. It's hard to understand sometimes. So anyway, so that newsletter is just something where I take one concept and boil it down super simply for somebody to understand in just a few minutes and really get a grasp on it. And so I love doing that. I enjoy doing that. And so I've been doing that for a couple of months now, and every Sunday, new topic that is just something that maybe gives people a little bit more understanding and makes them feel empowered to make intelligent investing decisions themselves. So that's where that is. So, but I appreciate you having me, Rob. I always love talking to you. You're super intelligent and fun, and I love your viewpoint as well. So I appreciate you having me on, and look forward to the next time. So thank you.
Means a lot to me, man. And just so everybody knows watching this, if you go to the description down below, there will be a link to his Twitter, and on his Twitter is where you'll be able to subscribe to that newsletter. And how often do you hear a hedge fund guy telling you not to get in an ETF? How often does that happen? So just know that he's genuine about it. So I highly recommend going and subscribing to that, and making sure you're following him on Twitter. James, it's always a pleasure, man. I really appreciate you doing this.
All right. Thank you, Rob. See you next time. Thank you.